Hey, what's going on, guys? Just wanted to kind of go through a couple thoughts off the top of my head tonight. Just a couple things I've been thinking about for next couple weeks as we have earnings coming up. It's still like 3 or 4 weeks away, but just kind of wanted to rattle this off. Bas- basically, oh well, one thing, um, pretty cool. With NFL playoffs and stuff going on. Just happened to check the um, Apple iOS store just to see how Fubo was looking on the charts. And basically, here, let me pop this over. Um, just happened to check, and they were in the top three on the entertainment app for the top free ones, which is pretty good. I mean, Paramount, YouTube TV, Fubo. Seeing Fubo up there was pretty cool. Obviously, they're gonna get a bump a bit with playoffs and things like that, and any major sporting event. There was X Games and stuff like that too, so might have helped a couple of those popping off at the same time. But pretty cool to see them up there. And so I actually I took to Twitter, and I just I was about to go to bed and I saw it and posted this. And then Gandler himself said, "Thanks. This has been the trend for the last couple of years." Pretty cool though. Just to he doesn't respond to a whole lot, but um, you know, I'm sure he's happy that people are recognizing that the company's growing and things like that. So, pretty cool little thing I just wanted to share. But basically, the kind of topic. This one I'll try to keep it short. But honestly, shout out to everybody who checked out the last video. That was my longest one by far. It was like 25 minutes, and that video probably performed better than any other video I've done. So, huge, huge shout out to you guys. Thank you. Um, but real quick, the stock price itself isn't really doing a whole lot. It's kind of in this little short-term downtrend for the week. We'll probably, I think we bottomed out last week around like 240, so we'll probably sit in this range for a little bit. And I'm expecting we'll get a little bump for earnings, and it'll probably start to build up. A week or two before, so we might sit in this 250 whatever range until a real catalyst happens, which is going to be basically the timing of Q4 earnings. So we're not a whole lot going on there. Still adding shares. Still probably sitting around the same range, still around the 100,000 share range. I think I added a little bit, but nothing crazy this week. But one of the things I wanted to just point out, I was looking back just as we're kind of preparing for earnings for Q4 23. I just popped back to a year ago for Q4 22, and really what's going to make it or break it for these guys is as you know, they are in positive gross margin territory. So the biggest bear case for Fubo for a while was the every subscriber they added, their content related costs were greater than basically what they were getting for revenue. So they were in kind of a losing situation. Now they are in positive territory, where I think the content related costs were like 89%. So that's huge. They've had some price increases. They're probably upselling people on some plans. I know I upgraded to Elite. I'm sure a lot others are kind of bumping their plans up. So they have that going for them. But really, and I've talked about it before, obviously, is the ad revenue. Last year so this is actually the 2022 Q4 earnings. They landed, their ad revenue was $100 million. So, I mean, they had a good quarter this last quarter for Q3 23. They signal that it's going to dip a bit in Q4. And so I didn't even realize how well they did on advertising dollars for last year. But that 100, so for us to hit 100, to basically break even year over year on ad revenue, they only need to hit 24.4 million, which if they signal they're coming in less, they'll probably be in the, I don't know, I'm going to guess and say like 28 million maybe. Somewhere around there. It'd be nice if they were a little higher, but let's just say 28 million for the sake of this. That's really only like a 4 or 5% bump over last year. And so for them to really grow this business and get that cash flow positive target of next year, they really got to kill it on the ad revenue side. And they've had these announcements and things on the their new AI enabled news programming and things like that. They really need to find a way to take that technology, and I'm sure they're working on it, but they really need to take that tech and find a way to really monetize it on their ad platform. They really need to get creative there, come up with some new approaches to collecting more ad revenue. And it sounds like they have the tech. They've definitely been growing on the ad revenue side, but if they can figure out how to use this tech and find kind of a new means of getting more ad revenue. They partnered with EDO just for their third party ad tracking. So, they really need to kind of utilize these different avenues and really increase that. They are in the positive gross margin territory. The more they can increase this, the more chances, they have of really being able to grow, exponentially in the next couple of years. So that was the main thing I wanted to point out, the ad revenue, because it really doesn't feel like this year they really doesn't feel like they killed it on ad revenue. But more to come on that probably. I might bring it up in the next couple of weeks before Q4 earnings, but we'll see. If you guys want to hear more on that, we can kind of dig into it a little more next time. The other thing was looking back at last year. They ended the year a year ago at 1.445 million subscribers, which is that was another number that was kind of higher than I expected. So for this year, the last call, they in their updated numbers, they basically forecasted for just under 1.6 million subscribers. I figure that's kind of a sandbag number, but they're really only showing, from what they ended last year at that 1.445, they're really only projecting like a 10% increase on subscribers year over year. So that's another one that's kind of weak. I'm hoping they kill that. We'll have to see. I think they're getting more competitive on their some of their plans and some of their rebates for the new customers. They're running a lot of different specials and stuff like that. So a couple different areas here. I think in the last year they've had a lot of focus on the cutting expense side, which they've really been able to do. They've taken a lot of costs out over the last year, but I'd say that's probably been their key focus. And now they really need to get smart. They need to continue to obviously minimize their losses, but also get pretty smart with building out their ad tech and really building out that revenue stream. And finding ways to add more subscribers. They've spent all this money. As they reduce that, they need to get creative on the marketing side with how they're going to add more here. So those are kind of my thoughts. If you guys have any comments, feel free to leave them. Really appreciated all the likes and subscribers. It's been a huge help to the channel. But yeah, if you have any other thoughts, leave a comment. Otherwise, this video was not financial advice. Please do your own research. But we'll continue this next time. Thanks. See ya.